Hi everyone and welcome to a brand new episode. My name is Marcus and I'll be your host. In today's episode, we're going to take a look at AMD. If you're new to this channel, welcome. What we do here is that we study and analyze stocks. We go through the fundamentals and the technical aspect of a stock. We also talk about finance and investing. If you've been here before, guys, thank you so much for coming back. I truly hope you will enjoy this episode, and please give me a thumbs up, comment, subscribe, and let me know what you think in the comment section below. All right, thank you. Now let's get started. As I mentioned, we're going to take a look at AMD, and they are traded on NASDAQ and are in the manufacturing sector. And if we go over to the screen, we can see here that their market capitalization is $159 billion and their revenue is at $14.9 billion. The PE ratio is at 40. Now, guys, you know I like to take a look at companies with a PE ratio of 20 or below. So having a PE ratio of 40, that is just too high for me, so that is a no. Now, when you see a stock with a high PE ratio, that basically tells you that their market expectation of that stock is high, and therefore you might see capital gains on those stocks. But the overhanging risk is, if the company doesn't meet those expectations, we will see the stock price fall. Same thing goes when you see a stock with a low PE ratio. That tells you that the market expectation of that stock is low, and therefore might not get capital gains on those stocks. So just be aware of that. So having a PE ratio of 40, that is just too high for me. Now, their profit margin is at 26%. I like it. I like companies with a profit margin of 15% or higher. So having 26%, I like it. So that is a go for me. Now, price to sales ratio is at 10. Normally, I like companies with a price to sales ratio of maximum 4. So having 10, that is just too high for me. So that is a no for me. Now, price to book value is at 23. Now, I like companies with a price to book value of maximum 3. So having 23, that is just way too high. So that is a no for me. Now, if we were to summarize, the PE ratio is too high, price to sales ratio is too high, and the price to book value is too high. So that basically tells me that AMD at its current state is overvalued. Now, they don't pay out any dividend, which is a shame because I like those recurring income. Now, when you see a stock that doesn't pay a dividend, then you have to view it as a growth stock, and you have to see them through a different type of lenses. Now, the return on equity is at 72%. I like it. Return on equity basically tells you about a company's ability to create a return on their equity, and especially when you have a stock that doesn't pay out any dividend, it's critical that you have a company with a positive return on equity, because you want to have a positive return on the capital you want to invest in them. So having 72%, I like it. So that is a goal for me. Return on assets is at 20%. I like it. So that is also a goal for me. Now, the stock is currently traded at $132 per share. And if we go down to the 50-day moving average, we can see that we are trading below, but we are above the 200-day moving average. So this is not a clear signal, which tells me that there are uncertainties right here. And we can see here by the look of the chart that we are trading higher levels right now, but we'll take a closer look at the bigger picture further down. But let's jump over to the income statement. And what we can see here from the income statement is that the total revenue in 2016 landed at $4.3 billion and have grown to $9.7 billion in 2020, and also that the numbers have been growing every year. So a positive development. I like it. So that is a plus. Now, gross profit went from $1 billion up to $4.3 billion. And also the same trend here. The numbers are growing every year. I like it. So that is a plus. Net income went from negative $498 million up to $2.5 billion, and we can see that the numbers have been improving every year. We can also see a huge difference between 2019 and 2020. And now we have to ask ourselves, Are these numbers sustainable? But overall trend is positive. I like it. So that is a plus. Now let's jump over to the balance sheet. And what we are interested in here is that the current assets versus the current liabilities, and we can see there is a huge difference between the current assets and the current liabilities. Basically, if the company were to convert their current assets to cash, they are able to pay off their current liabilities. But not only that, we can also see that they are able to pay off their total liabilities. Imagine being able to pay off your student loan, your car loan, your mortgage, everything, and still have capital left. So that is a huge plus. So that is a major flex, and it still have $3 billion left on the table. So that is great. And we can see here that the total liabilities went from $2.8 billion up to $3.1 billion, and the number have been growing every year. But we can see for the last 2 years that the total liabilities are decreasing. I like it. That is a plus. I like that. Now, the outstanding shares went from 935 million shares up to 1.2 billion shares, and the number have been growing steadily every year. That is a minus. Basically, outstanding shares, when they are issuing a lot of shares, that basically tells us that your shares of the company is being diluted. Your share of the company is decreasing, and a lot of investors either skip this part or doesn't know about it, because what happened is they be looking at the balance sheet and they see a stock with a lot of assets, and the debt is not growing that much, which is great. But on the other hand, we see that the company is issuing a lot of shares every year. That means that your share of the company is being diluted. And when you see a stock doing buybacks, that means that there are fewer and fewer outstanding shares, which means that your share of the companies is growing. That's seeing that AMD is doing issuing a lot of shares. That is a negative, so that is a minus. Now let's jump over to the cash flow, and what we can see here on the cash flow is that we want to see the operating cash flow versus the capital expenditure. And we can see here in 2020 the operating cash flow landed at $1.1 billion, and the capital expenditure at $294 million, a difference of $800 million, which is a plus. I like it. We can also see that the operating cash flow fell off 1 year, but the numbers have been growing for the last 3 years, which is a plus. I like it. We can also see that the capital expenditure have been growing steadily every year, which is a plus. I like it when they invest in the business. Now let's jump over to the key figures, and what we can see here is that the earnings per share went from negative 53 cents up to $2 per share, and also that the numbers have been improving every year. We fell off in 2019, but overall trend is positive. I like it. Revenue per share went from $4.5 per share up to $8 per share, and also the number have been growing steadily. We fell off in 2019, but overall trend is positive. Equity per share went from 51 cents up to $4.8 per share, and also the numbers have been improving every year. I like it. Now they don't pay out any dividend, which is a shame, because I like those recurring income. Gross margin went from 23% up to 44.8%, and we can see that the numbers have been improving every year. I like it. The business is becoming more and more efficient, so that is a plus. Now still with a gross margin in 2020 of 44.8%, that means that more than 50% is a cost of goods sold. Imagine selling a product or a service for $1, you get to keep 44.8 cents. That is a huge chunk that goes to the cost of goods sold. Now we need to compare these numbers across the industry and see how their competitor is performing. But overall, I'm liking the trend. They're becoming more and more efficient, so that is a plus. Operating margin went from negative 10.6% up to 13.2%, and also the numbers have been improving every year. I like it. Profit margin went from negative 11.6% up to 25.7%. Also here the numbers have been improving every year. I like it. Return on equity, as I mentioned, tells you about a company's ability to create a return on their equity. Especially is critical when you have a stock that doesn't pay out any dividends. You want a positive return on equity, and we can see here they went from negative 104% up to 42.6%, and also the numbers have been growing. We fell off 1 year in 2019, but overall trend is positive. I like it. Return on assets went from negative 15% up to 27.7%. The numbers have been growing. We fell off in 2019, but overall trend is positive. Solidity tells you about a company's financial strength for the long term, and we can see here that we went from 14.3% up to 65%, and the numbers have been growing steadily every year. I like it. They are becoming more financial stable during uncertainties, so that is great. Balance sheet liquidity, same thing as solidity. Here it looks at the company's financial strength for the short term, and we can see we went from 1.6 up to 8.6, and the numbers have been growing steadily every year. I like it. Debt ratio went from 5.9 down to 0.554, and the numbers have been falling every year. That is great. Basically in 2020 the company had 0.54. that means that they had 0.54 times more debt than equity, and seeing that the number is getting lower and lower, that is a plus. I like it. Not a huge number, but the overall trend is positive. I like it. So guys, we have gone through the income statement, the balance sheet, the key figures. Now over to the cash flow we've gone through, but now over to our key features, which is the pillars. And basically what the pillar does is that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. So if you go down to the screen again, we can see here that the P/E ratio is above 20, which is negative. They don't pay out any dividend, which is negative. And also the number of outstanding shares have increased, that is negative. Revenue have increased over the past 5 years, positive. Profit margin above 15%, positive. Profit increased over the past 5 years, positive. And current assets is greater than current liabilities, positive. And solidity increased over the past 5 years, positive. Balance sheet liquidity increased over the past 5 years, positive. And debt equity ratio decreased over the past 5 years, positive. And total liabilities have grown for the past 5 years, that is negative, even though they have starting reducing the total liabilities. But overall, looking at the 5-year period, the total liabilities have grown. So that's why they get negative. Guys, as you can see, it gives you a simplified, holistic overview of the company's performance. It saves you a lot of time. As I mentioned, if you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. And you can have this software along with everything we've gone through, plus access to our discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to jump over to commerce.sc and become a member today. All right. Thank you. But now let's jump over to the technical aspect of the stock. So here we have the chart. As you can see, there is already drawings on the chart, and that's because it's from our previous video that we did. And you can see here that we have been are in a positive trend channel, and we can see also here that we have a strong support and resistance line over here that crosses the middle of the channel. And we can see last time we spoke, we were over here, and there we had two directions to go. Either we would see the stock price move towards the resistance level, and my prediction were if we were to break out of that channel, I would wait for the stock to come back down, and if we break these levels, then that would be a buying option. If you bought over here, you would do a 20% capital gains over here. And the other direction we saw, if the stock were to move towards the resistance line over here, that we can see that have been a strong resistance support line historically. If we were to break down, then there's a lot of of buyers over here waiting to enter the stock, but there is overhanging risk right now. We're seeing the Fed is tapering. We are expecting multiple interest hikes this year, and also there's midterm coming up, and we have seen lately that the 10-year treasury is growing. So those are not good news for the stock market, and we are seeing a lot of sell-offs right now. Bitcoin fell to below 40, and the indices have been falling. So I expect that we are going to see the price continue to fall back down to the channel. As we can see, if you look closely, we have a leaning double top over here. So if the price continues down and breaks these levels right here, as we can see, it is already doing, but if it confirms and falls back down to the channel, what I will do is I would wait for the stock to continue to price towards the support line over here, and this would be a buying option right here, because we also need to be aware and take in consideration how long will it take before the numbers hit those support lines, because as I mentioned, we have the midterms coming up, interest hikes, and we have to see the market readjust itself for the future. So I believe that the stock price will continue to decrease towards the resistance level over here, because this is a great company. The profitability is there, the indebtedness is there, their numbers is there, and they have a strong business, and the leadership is great. So this is a great company, but it's a growth stock, so therefore you have to view it as a growth stock. So I would be buying over here towards the support line, but I would be very happy if it broke down towards this area right here. But that would be a great buying area. So that's how I would trade the stock. How would you trade the stock? Please let me know in the comment section below. I truly hope you enjoyed this episode, and please give me a thumbs up, comment, subscribe, and let me know what you think. Until next time, guys, take care. Bye bye.